Welcome to the Capital News. I am your host, Alex Kreitis. Today is Monday, April 27th, 2020. Thank you so much for joining me. I hope you all enjoyed your weekend. The title of today's podcast is Unlimited Stimulus. No surprise, we are in the world of financial odds. We have been there for quite a while, but now it is on overdrive. Coming to the fore once again, this is going to be a week of the central banks. It seems like every week is a week of the central banks, but now they do officially have their meetings and their announcements. Well, we got to kick off with the Bank of Japan, and surprise, surprise, they have announced that they are going to do unlimited bond buying. Unlimited bond buying. Now, it could be argued that they've already been doing this and have been doing this for quite a while, but isn't it so reassuring when our central bankers come out and tell us that they're just going to do whatever it takes to do whatever it takes? So that must have been a nice boost to the markets, because the markets continued their rally today, pretty much across the board, across the globe. We'll get to that. We have the Federal Reserve meeting this week. We also have the ECB, the European Central Bank, meeting as well, and we're going to get some of their meeting decisions as well. Now, I can imagine what the Federal Reserve is going to tell us is that they too are going to do whatever it takes to do whatever it takes. And we already know this, but it's just going to come out to be that reassuring, that little league coach that just says, you can do it, Timmy. Just go out there and give it your best. And if not, we're going to come out there and we're just going to help you. We're just going to throw you as many pitches as it takes. You can't strike out. That's what they're going to try to do. There is no fair game. There is no fair market. There is no free market. This is completely rigged, and it can be rigged to both sides. So, yep, they can attempt to put a floor under this and get this type of V-shaped rally, recovery, whatever you want to call it. But guess what? They can also pull it out from under you. So don't be surprised if that happens. And history tells us more times than not that is exactly what happens. You see these huge drop-offs, which we experienced. You can see a massive rally or some sort of retracement, which we, at least here in the United States, have been experiencing. Not so much so to the same extent in some of the European markets, but definitely here in the U.S., a very, very strong rebound or retracement. And then if you understand the history of recessions and bear markets, it's typically a head fake. It's a retracement. It's a technical move. And then the fundamentals come back to roost. I am imagining that is the more likely scenario. Or we can make the argument that this is a new paradigm. Fundamentals don't matter. Technical levels don't matter. It's all about central bank liquidity and any type of fiscal stimulus coming from whatever federal government, regardless of whether they have a surplus or in deficit. And most of them, of course, don't have the money. They're as broke as a joke, just like Uncle Sam, and they are in deficit. I hope we are not in a new paradigm, because you're going to have to throw every book out the window. And there's not going to be any type of market. You're not going to have to do or understand any type of fundamental analysis. Companies and corporations aren't going to need revenues or earnings, profits. Not going to make a difference, because as long as the central bank is there and the federal government is there to backstop everything, well, then everything is A-okay. I do not believe in this. I don't believe in it philosophically, politically, economically, across the board. It's not what this country stands for. It's not what this country was founded upon. People don't care about principles, philosophy, our Constitution, the rule of law. The Federal Reserve, Congress, the White House don't even care about the Constitution either. They don't care about the Federal Reserve's charter, their own charter, which they are obliterating, completely ignoring. That's why you have the special purpose vehicle set up within the Treasury Department, which allows the Federal Reserve to circumvent all of that, at least legally speaking, which is a joke. It's a farce. It's a ruse. It's a con. And you're going to have to pay for it. Was never so expensive. Now that you're getting a check, it's worth. It's like a bachelor's degree. Everybody has a bachelor's degree. What are they worth? Nothing. Not that much anyway, right? Unless you're in the right field at the right time. It's not worth much. That's why you have so many people going back to school to get a secondary bachelor's in the right field at the right time. It's not worth much. That's why you have so many people going back to school to get a secondary bachelor's or to get some sort of technical training or a master's degree or even a PhD to differentiate themselves, because everybody has it. And if everybody has something, it's not worth that much. Some could argue it's worthless. So if everybody's getting 1,200, or if they kick it up a notch and they continue with stimulus and they say, okay, well, everybody's now going to get 2,000 a month, it's all going to be worthless, folks. This is the inflation. It inflates it away. It inflates the value of your purchasing power away. Okay, inflation is here. It's not going away. Hyperinflation is on its way. This is a process. It takes time. It's not going to happen overnight. It is a process. Understand that. Just like with what's taking place in the markets, particularly the stock markets, like I just stated. You get these big sell-offs, you get the retracements. That's what history tells us. It's part of a process, and it takes time. Okay? But again, like we say here, stay diversified and stay vigilant. It's the best way to go about it. All right? Market performance today, on the back of this unlimited news, because there is no good news. It's all unlimited. Federal Reserve spending, Bank of Japan spending, ECB spending, federal government spending money that they don't have. Forget 26.5 million Americans are unemployed. Stocks go up. Forget the United Nations telling us that they are forecasting multiple famines this year alone, and I can almost guarantee you they will continue into the years ahead. In addition, we have, and I stated this last week, about 200,000 pigs potentially coming out of Minnesota farms that are just going to be euthanized and buried. You already have some pork farmers, some pig farmers in Canada, which have already done this. Heard over the weekend that there are up to possibly 2 million chickens out of the state of Delaware and Maryland that are going to suffer the same fate of being euthanized and buried, because you have these slaughterhouses that are closed down. But isn't it ironic that we are destroying food at the same time we have the United Nations saying we're going to have multiple famines? We can print, without strings attached, evidently, trillions upon trillions upon trillions of dollars with no end in sight, because this is just the tip of the iceberg and they are just getting started. No oversight, no accountability, no strings attached. Trillions of dollars to keep Wall Street happy, to keep some liquidity flowing through the system. But we have people starving to death, and we are destroying 200,000 pigs, maybe 2 million chickens, $1 million worth of lettuce. Does this make sense to anybody? Do we have our priorities in order? Or are we more concerned about materialism? Are we more concerned about trying to get things back to the way they were before, which was completely unsustainable? People buying stuff they can't afford, they don't use, or they're rarely ever going to use, that's not going to do anything for them. Does that make sense to you? And they're all doing it, most of them anyway, on credit cards with interest rates that are akin to loan sharks. Okay? Does any of that make sense? Who is in a hurry to get back to that? Did that sound right to you? Did that sound normal to you? Does that sound sustainable to you? Because it wasn't, it isn't, and it's not going to be. And people are going to have a very, very hard time waking up to this reality. And if I'm wrong, well, then we're really screwed, because we've learned nothing. We've learned absolutely nothing. It's going to be the perpetual kicking the can down the road for future generations to pick up the bill, which I personally think is immoral and unethical. But that's what we do around here. All right, so the markets were up today. Nothing can keep them down. Like I said, that litany of bad news. PMIs we talked about last week. Terrible. Some of them, the worst since the great financial crisis. Some of them worse, or since the Euro debt crisis in 2012. Some of them worst ever. Worst in history. Worst readings in history on various PMIs, depending on the country, depending on the metric, whether it's services or manufacturing. Markets keep going up. They don't care. As long as there's a central bank to print money, everything's A-OK. Dow was up. The S&P 500 was up. The NASDAQ was up about a 1% today. Small caps really took off. I don't know if this is some sort of month-end rebalancing or something, or just trying to get the best out of it so they can prime their monthly end numbers. The small cap index was up over 3% today. It might even close up 4%. Just unbelievable. Right now, as the podcast is taking place, the Japanese markets are down about 0.3%. All in the green across Europe today, varying between 1.5% to 3% depending on the index. But right now, we do have the futures trading, And the Dow, the S&P, and the NASDAQ are all trading in the negative for the time being. We also have the Australian markets trading down about 0.5% at the time of the podcast. On the commodity front, oil continues to get pummeled. WTI settled around $13 a barrel, but at the time of this podcast, it is trading even lower, trading at $11 a barrel. This, of course, is for the front month. Futures contract for the month of June. This will expire in the next few weeks. We'll see if this enters negative territory as well. It's quite possible. We know it's a possibility because it happened a week ago. Negative $38. Unbelievable. So to say that it can't happen again would just be foolish. It most definitely can. I hope it doesn't, but it might. But if that's what has to take place in a market that's somewhat trying to operate, well, then so be it. Brent, the international metric, is trading at $19 a barrel, also getting pummeled. Natural gas is down slightly, $1.85 per million British thermal units. Gold and silver also taking a little bit of a hit. Gold is now back below $1,700 an ounce, trading at $1,697 an ounce. And silver is trading at $15.04 an ounce. On the bond front, the U.S. 10-year Treasury note is yielding 0.65%. So a little bit of selling on the bond front to get those yields back up. People, I guess, starting to think, well, it might be a risk-on event. Risk on for what? I have no idea, other than to say they think the reopening of the economy is going to be fantastic. I remain skeptical, especially for the long term. I mean, you might get some sort of quick boost, but I don't think it's going to be long-lasting at all. And, of course, central bank money printing, because we had the Federal Reserve come out today and already expand. Now, they haven't quite yet done it, but they've already admitted that they are going to do it when the time comes. They are going to extend one of their loan facilities to assist smaller counties and cities. Okay? So if Congress wants to drag their feet because Mitch McConnell wants to play tough guy and say, I'm fine bailing out corporations to the tune of trillions of dollars, even though they squandered their resources, financially engineered their stock prices, but when it comes to bailing out the states, can't do it, let them go bankrupt. Okay, now there's a little bit of backpedaling on that, a little bit of politics in that, obviously. We'll talk about that here shortly. Of course, we at the Capital News here, we're totally against these bailouts. I don't want the corporations bailed out. I don't want the states bailed out, okay? But now you have, okay, a little bit of posturing here politically, so now the Federal Reserve seems to come in and say, all right, well, we'll come out and help them. If Congress isn't going to do it, we'll be glad to keep printing press on. And we're not just going to help out the big cities, which was originally part of their lending facility, but now they are going to expand that to incorporate smaller cities and smaller counties. Now, I think it's just going to be a matter of time before they get to like micro towns, you know, those rural cities that have like 15 people. I mean, they're going to bail everybody out. I mean, you can't make this stuff up. This is all new too, folks. You understand, this stuff is not long-lived at all. It's only been around for a few weeks, and they're already expanding these programs and facilities. At the same time, they continue to tell us that everything's going to be okay as soon as we open back up. Which is it? Which is it? We're going to start reopening. Okay, well then why do we need all this extra stimulus if everything's going to be okay? If everybody's getting a paycheck, if everybody's getting an unemployment check, if everybody's getting a stimulus check, then what's the concern? What's the cause for concern? Why do you got to keep expanding one bailout facility after the next? Maybe they know something. Maybe they know the truth. Maybe. So what is Mitch McConnell doing right now? Well, of course, he's playing politics. And Congress is already working on or about to work on another phase. I guess phase 4. This would be of some sort of, again, we use the word stimulus. It's not stimulative, but that's the jargon they throw out there. We of course use it in quotations. Phase 4 of some sort of stimulus package. Presumably, it's going to be to assist the states and perhaps cities as well. This will probably be at least another $500 billion, probably more. And as far as I know, if it's going to be at that price level, $500 billion, I don't know how much that's going to incorporate any type of major infrastructure, because before we even got to this, there were numbers being thrown around that was about $2 trillion for infrastructure. So I don't know if that's going to be part of phase 4 or if that's going to be phase 5. or God knows what phase by that time. And of course, for this to have any type of quote-unquote stimulative effect, it needs to be immediate, right? They really got to start throwing that money out there into the system. Well, if that's the case, then we're going to end up with a deficit. It's like $6 trillion. It's almost a third of the economy. Absolutely ridiculous. Absolutely unpaid for, except through the printing press, which is inflation. At these numbers, it's going to be hyperinflation. Look out on the other side. It takes time, but it is coming. And if you continue to see these types of food shortages, well, it's really going to hit your pocketbook very quickly. But what Mitch McConnell is at least doing here, he said, well, you don't got to take that statement too literally that they have to file bankruptcy, the states. That's obviously just an option, and I don't expect them, he says, to file for bankruptcy, but it should be an option to them. But if we're going to bail them out or give them any type of assistance, he wants to throw in some sort of, some sort of lawsuit protection clause in there, I guess, from employees, employers, to make sure people aren't sue happy if they go back to work and somebody gets sick, this, that, or the other. Okay, I understand the gist of what he's trying to do. I don't like it. Allow the court system to figure it out. If it's a frivolous lawsuit, it'll be thrown out. I don't like this when the government, especially through legislation, gets in trying to pretend that they know everything. I don't pretend to know everything because I don't know everything. I'm not arrogant enough to put forward some type of legislation like this that pretty much presumes that you know every type of situation that's going to unfold when this economy quote-unquote reopens. I don't know what's going to happen. But if you put some type of legislation in place that prohibits somebody from suing somebody when they have standing to do so, I think that's devastating to that person who is suffering damages and they have no recourse because of some stupid law. Let the court system work that out. Let lawyers work that out. Make a deal. You can't make a deal. Okay, we're going to trial. A judge is going to make a decision or a jury is going to make a decision. That is part of the government. 3 branches of government here, people. We do not have to have a law for everything. All right? Let private parties work this out. Because you don't know what it's going to be. It could be to the betterment of somebody for having a lawsuit. Something good could come out of it. A better practice could come out of it. Somebody who actually legitimately suffered some sort of damage can now be rewarded or compensated, I should say, for suffering those damages. Let that take place. I don't like frivolous lawsuits. Let the court work its way through. Let them throw them out. Let them dismiss them. That's what the court system is here to do. The government is not here to make laws for every little detail. They don't do a good job anywhere. So they should not be nitpicking all of these little things. But this is what Mitch McConnell is now going to dangle in front of the Democrats is, if you want us to bail out the states, you're going to have to give us all of these protections from lawsuits. And of course, most would presume that this is more or less protecting some corporations over, employees, because you're making me work in a certain situation. This isn't safe. That's not safe. That's a hazard. Or people cutting corners. It happens, folks. It happens. People cut corners. People try to save a buck and somebody gets hurt, okay? That person who gets hurt should have the right to recourse if they suffer some sort of damage. Again, let the courts decide. Don't throw some type of blanket policy with saying, well, you just can't do it. Now, again, we don't know all the details, but the principle of the matter remains the same. Stay out of it. Let the other branch of government deal with it. Period. End of story. There's too many laws. All right, so that's that. We'll keep you updated on that. We don't have the money, but they're going to stimulate. They're going to bail out the states and the cities and the localities. Federal Reserve's on board. They're already doing it, ready to do it. Congress will come to the rescue as well. And again, even though they don't have the money. Interesting survey from Lending Tree in regards to some of these small business loans. Well, 5%, according to this survey, 5% of small businesses have received approval and received the money. 5% approval and the money. Some 60% are still in limbo. They're either continuing to make their way through the process, or they don't know if they're going to get the money. Some do, all right? About some 60%, still in limbo. And then the remaining 30-some-odd% are saying the process is confusing, they're not getting straight answers from their financial institutions, etc., etc. And then, of course, we know about all of the larger corporations, even some publicly traded companies, going in to get some of this money. Now, some of them have given it back because it's not good PR, obviously, and others, they said, screw it, we got the money, we're going to keep it. And, of course, the Congress appropriated, some $350 billion the first go-around. That money was just sucked up as soon as it was leaked out, and it caused them to throw another $484 at it just the other week, and I'm sure most of that, if not all of it, is gone as well. And, of course, not all of it was for that. A lot of it was for hospitals and medical workers as well. But it's unlimited. It's completely unlimited. You know, it's just money. It's the fairy. It's the money fairy. Grows on trees. Printing press. Don't worry about a thing. You know, I watched an interesting segment yesterday on Mark Levin's program on Fox. I watch him occasionally. And he had on the early segment economist Art Laffer. I'm sure many of you are familiar with him. He's been around for quite a while. Really made his bones, I guess you could say, in the Reagan administration. Came up with, the Laffer curve, which we've discussed here on the Capital News several times before. I don't agree with it. I am not a fan of Mr. Laffer's. I think a lot of that quote-unquote Laffer curve is laughable, ironically, with his name. I don't think it works. I also think there's a lot of contradictions within the arguments made in support of the Laffer curve, because the Laffer curve is basically arguing that there is an quote-unquote optimal tax rate that the government should levy that will not prohibit people from working, but it'll bring in a lot of money too. So it's sort of this happy medium. It's the win-win situation, okay? It assumes a lot of things that are just completely unrealistic and not going to happen, and also don't happen. This is sort of your trickle-down supply-side economics, which does not work. This has been proven not to work, but this is what the Republican Party will continue to throw out there. Ronald, all of your conservative, Republican, fiscal conservative buddies, again, you're fiscally conservative when there's a Democrat in the White House or the Democrats are in control of Congress. When it's your guy, it's perfectly okay to run up deficits and debts and all that stuff, because that's exactly what happened under Reagan. Huge deficits, huge addition to the national debt. George W. Bush, huge deficits, huge run-up in the national debt. And now we have Donald J. Trump, huge deficits, huge run-up in the national debt. And this was before COVID-19, folks. We had trillion-dollar deficits before the onset of COVID-19. Do not forget. Okay? This does not work. Again, one of those contradictions when they make their own argument for the Laffer curve from Republicans is they always argue government has too much money. Government wastes your money. Both of those statements are correct. The government has too much money and the government wastes your money. However, when you have these guys arguing for supply-side economics, really pushing Art Laffer's Laffer curve, okay, one of their biggest arguments is, yeah, it lowers taxes, but it brings in more money for the government. Well, how does that make any sense? How can that be one of your biggest arguments for it? If you're going to rail against too much money in the government, being wasteful with it, which they are, then how can you say, as one of your leading arguments for this policy, is the government's going to bring in more money? It makes no sense whatsoever. It's completely illogical. Completely illogical. It only works, quote unquote, for the Republicans when their guy's in charge. That's why these parties are both jokes. It's one big party. They've been screwing everybody. Understand this. So I'm not a big fan of Mr. Laffer's. He also came up with the idea of making Congress commission-based, based off of their performance. Now, I don't know if it was just generally speaking, but he did throw some numbers out there. I did not write them down, but the numbers were ridiculous, because he was basically saying, well, if we have 4% GDP, they get paid whatever they're getting paid now. But if they get paid, if they have GDP of 5%, well, then you can double their pay. And if it's 5.5% or 6% or whatever the numbers, well, you triple the pay. Is he stupid? Are you kidding me? Are you out of your mind? And he cites corporations, CEOs, executives. They get paid based off of some of their performance. That's true. That's true. And what are we seeing? What has that led to right now, ladies and gentlemen? A whole bunch of financial engineering that is bringing us to our knees. Something that's been taking place for a decade. Financial engineering to enrich themselves because that's the incentive. What do you think politicians are going to do? You think all these people are saints and angels? Are you out of your mind? They already fixed the numbers as it is. They're going to start double counting things so GDP goes through the roof so they can get paid 3 times what they're getting paid now, which is too much to begin with. Are you kidding me? That's ridiculous. They're going to manipulate, I would assume, once again, the inflation rate, because I'm sure he's talking about real GDP, so you have to take inflation into consideration. They already understate it as it is. They'll tell us there's no inflation. They'll tell us there's negative inflation, so GDP can really go through the roof. Meanwhile, if you're somebody who collects Social Security, you're going to get screwed because your cost of living adjustment is just going, it's never going to keep up with reality because these guys want to get paid. Has he not been in Washington, D.C.? Of course he has. Does he not know who these people are? Of course he does. If anything, these people should get paid the median wage. Let them all make $40,000, and then we'll see who wants to go do quote-unquote public service. Then we'll go see who cares about this country. That's what it should be. More than akin to making a commission-based. Get the hell out of here. Are you crazy? And again, doubling or tripling their salaries? Because let me tell you something, ladies and gentlemen. Even if we had GDP of 4, 5, 6% in this country, I can almost guarantee you that your salary will not increase by 2 or 3 times. So are you happy with a bunch of people in Congress making that much more money? I don't think so. And then lastly, he brings up the point of the payroll tax cut, which he says needs to be temporary for some reason. I didn't get all of this either. Didn't fully understand this, but it seems highly political to me because he says that, well, it needs to take place just through the end of this year. Well, what is this year? It's a political year, isn't it? Presidential election. Interesting. Which again is somewhat contradictory when they makes this argument because he's also complaining about deficits. And they were also talking about inflation and whether inflation comes. Mark Levin thinks there is going to be inflation. Art Laffer does not, which again I think is laughable and ridiculous. I mean, it's coming, believe me. Do the payroll tax holiday. Well, a lot of people aren't working. The payroll tax funds Social Security, which is already on its pathway to insolvency. This will hasten that. Not to mention, Social Security is one of the key drivers to our national debt to begin with, so now it's just going to blow an even bigger hole in the national deficit and thus the national debt. So that's going to mean either higher taxes some point later on, it's going to mean higher rates of inflation, perhaps inflation, or they're going to default. Do any 3 of those options seem reasonable to you? Because cutting the payroll tax for, we're already in the month of May, basically, for 7 months, ain't going to do it. Ain't going to do it, especially when you have a phased-in, quote-unquote, reopening of the economy. Also, when you have a lot of people who are getting paid more on unemployment. They're not going to want to come back to clean a toilet if they're getting paid more on unemployment. Use your head. So I don't get it. It's always these contradictions. We don't like the deficits, but then you do something that's going to increase the deficit. Now, of course, their argument will be, well, we're going to grow our way out of it, which is just preposterous. I mean, this is simple mathematics, ladies and gentlemen. If you viewed any of our presentations on the Kapital News, which I ask that you do, and like them, share them, subscribe to our channel at the Kapital News, YouTube, everywhere. Check them out. And you can visually tell that we are not going to grow our way out of these problems. The deficits, the debt, the Fed's balance sheet. That's why I do those capital economics presentations, so you can see this stuff visually, because it's one thing to talk about it and somebody to sit on there on a TV, sound smart, like they know what they're talking about. But then when you go and you look at the numbers, even when you look at the graphs, you say, yeah, I don't think so. And that's really all it takes. Now, of course, I have a lot of education on this. This is what I study. This is what I look at. So I know pretty quick looking at some things, whether something makes sense or not. But still, intuitively, you look at some of these graphs, you know stuff is not right. And that's all it is. It's basic math. It's basic math. The type of growth that we would have to grow ourselves out of this mess would be historic. It would be historic. And when you have an economy that is as large as ours, moving at that pace is a near impossibility. The corrective course in all of this is to allow free markets to work. Period. Stop. End of story. This is a story of deleveraging. That's what needs to take place. It will be very painful. Very painful. But I can assure you, the further we kick this can down the road, the more money printing that we do, it's going to be even more painful. It's just a matter of time. People are hopeful. People think that these idiots who have perpetuated these policies are now somehow going to be our saviors, our rescuers. I don't understand this logic, except it's hope. And as I always say here, hope is not a strategy. But that's what people are clinging to. There is no leadership except the people who were protesting before, and they will be protesting again. Make no mistake about it. Even the International Monetary Fund, the IMF, has picked up on that one, and they're usually last to the party. So buckle up. Buckle up. CapitalNews.com, representation and recourse is our letter. Copy it. Mail it out to your congressmen and senators. Keep my name on it if you want to. Please, please do. Not because I want credit, just because I want these idiots knowing that we're coming for them, that they cannot continue to do this nonsense. They can't. Amend it, make it your own. Do what you want. But speak up. Let them know you are disgusted with this system. Let them know that you're not going to stand for this any longer. That it is unsustainable and it is not what this country was founded upon. And another thing we had today, too, before I sign off here, is Donald Trump in his, daily, nightly COVID-19 White House briefing, whatever these things are called now, talking about bailing out the farmers once again and how we have billions and billions of dollars taken in from the Chinese tariffs, which again is an outright lie and just ridiculous. And he's claiming that we still have money. And it's still there, he says. We have more. We have more, he says, sitting there. We have a $2.5 trillion deficit right now. It's going to be over $4. Might be $5. Could be $6 trillion, depending on what these idiots pass over the next couple of weeks or months. We are broke. We are broke. We don't have money. We never brought in that quote-unquote tariff money from China to begin with. Remember, if everything was so good, why did he start cutting those tariffs around Christmas time, right? He was concerned. If it was such a boon, then you should have kept it going through that too, didn't you? But he didn't. He didn't because he knows, but he doesn't care. He doesn't care about the truth. He thinks, no, he knows better, but he doesn't care. Let's just say we brought in money from the Chinese tariffs. We didn't. It's still sitting there. It's not. And we're going to continue to bail out the farmers. I mean, ladies and gentlemen, I don't know how you can vote for anybody in this election personally. As we get closer, I'll probably do a pretty in-depth podcast on my opinions of all of this, but I just don't know how you can support Donald Trump at this juncture. I also don't know how you can support Joe Biden or anybody else for that matter. I mean, don't you understand what these people are doing to you? Don't you understand what they have done to you? I mean, it's right in your face. Because you hear what you want to hear every once in a while, you think that's forgivable as to what they've done and what they're continuing to do. This is a financial and economic coup d'etat. They don't give a damn about the Constitution. The Federal Reserve doesn't give a damn about its own charter. States are broke. Cities are broke. Federal government's broke. People are broke. Stock market's up. You want to continue to support this nonsense, be my guest. It's a free country. You can do it, but I'm asking that you make a stand. I'm asking that you leave these parties. And perhaps I might be asking that you not vote in this election, at least not for the major parties. Speak up, because we don't have a vote of no confidence in this country, but I think we kind of need one. We kind of need one. And maybe we can get that if we start to leave those parties or if you vote for somebody else. Because this is nothing but disgusting to me and despicable and a huge disgrace to our founding fathers, our principles, and to all the men and women who fought to keep this country free and to have a rule of law. Well, this country isn't free, and the rule of law is just disappearing by the day. But that's it. Unlimited stimulus, so I guess you don't have a thing to worry about. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.